Today, we are going to be going into starting on off order types. Now, you might say, what do you mean by order types? Well, there are multiple different ways to get into a play. Now, I'm going to bring over my broker and I want to be able to show you exactly what I mean. So if I wanted to get into a play, I would have my order entry box right here. I could be able to type out any stock I want. Let's look at what's the hottest top gainer today. The hottest top gainer at this time, as we can see, is APLM. APLM. If I wanted to buy APLM, I would type in APLM. I would type out how many shares I wanted, and then you could see it says type here. This is very important because we have limit, we have market, we have stop limit, we have add only, limit on open, limit on balance, market. What the heck is going on here? So we want to be able to break down how we actually want to get involved into a play, when we want to be using certain orders, and which ones are going to be the most helpful for us. So the first thing we're going to start off with, team, is very simple and very easy. We are going to start off with market orders. Now, as you guys can see, if I have a market order right here, this is going to be the most popular. Okay, so market orders are going to be the most popular. They are going to be the quickest way to get involved into a play. So when I market order a play, it is going to be easy. It is going to be very simple. All I need to do is just click the buy button. The moment I click buy on a market order, boom, I'm filled on that play. Well, Deck, where am I getting filled on that play? You are going to be getting filled on the stock on wherever the ask is on the level 2. So we have not gone into our level 2 lessons yet, but the ask is going to be the right side of the level 2. So when you click buy on a market order, whatever is the asking price over here on the level 2 is where you will be filled at. So right now, if I click buy 100 shares and I click buy right now, I would get filled at $33.98. Now, when I do a market order, it is getting me in as quickly as possible. And it's going to get me the best price possible. The best price possible is going to be the lowest price that someone is currently willing to sell their shares at. Over here on the ask are people who have shares that are putting them up for sale. And when I click a market order, I'm getting the best current available price in the quickest fashion. So why would this be beneficial? Why would this be helpful to us? Why would we want to ever get involved into a market order? Well, one of the best reasons on why we would ever want to get involved into a market order is in case if a stock ever starts spiking. Let's say all of a sudden we see that on our scanners a stock starts moving its way on up. And then we see it starting to move itself up very quickly. And we see it's really starting to pick its way on up. We might just want to say to ourselves, this has so much momentum, I just want to jump in and try to ride on up with the hype. I just want to jump on in and try to ride on up with some spiking. I just want to jump on in and see if I can be able to catch some of this, catch some of this fire. This is why we like to do market orders. Market orders are going to be more for momentum. The negative about a market order is we are not exactly sure where or what price we are going to get filled. Well, yes, we are going to get filled at the asking price, the best available asking price, but that's not the price that we chose. And when there's hundreds to thousands of orders going through all at once, guess what's going to happen? We might get filled at 33 cents, but maybe so many people are ordering at the same time, we might not get filled to 34 cents. Maybe so many people are doing orders at the same time because the stock is spiking that we might not get filled to 36 cents. So the thing is, traders, the best way to trade, as we talked about yesterday with our trading plan segment, is that we want to have full confidence. We want to have the best entry possible. And when we can choose the entry that we like the best, that is when we are going to be able to say to ourselves, hey, this is awesome. This is great. I could choose the entry. And that's what's going to be on limit orders. Limit orders, we decide the price that we want to get filled at. So let's look at a different stock instead right now. Let's go to CXAI. So let's go to CXAI. Let's say CXAI, I see that we have very strong support. Pop quiz right now, guys. Where do you guys see support? Where do you guys see resistance over on CXAI? We went over support and resistance yesterday. We talked about one of the best ways to look at this is past chart history pattern. There's two different areas that kind of stand on out to me. Number one, you can always look at the pre-market low. Pre-market low is great. It also, again, does go a little bit low if we wanted to, down towards some old spiking highs right here, right here, right here, right here. We can also look over on that daily chart if we want to. Is there anything that's really great for, again, a bounce play? Well, look at all the indicators. We have the 50-day moving average at 223. We have the 200-day moving average at 223. This would be, again, detailed support. 50-day and 200-day moving average all at the same area. That's going to be a very strong support line at around the price of 223. Let's go ahead and put in a support line right next to 223, which is also at the pre-market low right here. Okay, boom. So just like that, we are starting to get together a dip buy and a bounce play opportunity. Remember, this went over yesterday's lessons with the 50-day moving average bounce, with the 200-day moving average bounce. We're talking about detailed support. If you guys don't know what I'm talking about, remember, make sure you guys watch day one's lessons as it will go over it all. And look how perfectly this lines up with the bounce play in pre-market. Very great. So if I see that CXAI, we have this 50-day moving average, 200-day moving average dip buy. We have, again, the dip buy off the pre-market lows. And now I'm saying to myself, Deck, I don't want to just jump in randomly. I want to jump in when we get filled down towards this area right around 223. Well, what could I do on this play? Well, now that I have the area that I really like, now that I have the area that I really enjoy, I can go over to CXAI. I can go over to CXAI, type in limit order, and then type in 223. Now, when I click buy, I am not going to get filled right away. Guys, when I click buy, what this is going to do is send a pending order. A pending order is now waiting for this to come on down towards 223. Now, can you guys see the benefits of this? Can you guys see how this could help me in my stock trading? Could you guys imagine, oh wow, this is going to be extremely helpful in my trading because now I am going to have a set game plan. I am going to be able to get filled at the area I want and at the price I want. Now, that's great. That's awesome. So CXAI, I have an order that's going to get filled at 0 out of 100, 223. I can get filled on that. Bada boom, bada bang. That is going to be absolutely gorgeous. So CXAI, I can have a great game plan here. Now, what would be the issue with a limit order? I'm going to cancel this order at this time, but what would be the issue with a limit order? Well, with the limit order, you need to remember something. You are only getting filled when the stock comes down to your price. That means someone has to be willing to sell to your price. So when you do a limit order, it will show up on the level 2. It shows up on the level 2 as you are one of the people that is sitting at, for instance, 248. 248, your order will show on up. You put an order at 232, your order will show on up as the stock comes down to 232. Doing limit orders is how a stock shows up on the level 2. A market order will just get filled instantaneously. When I buy shares, I get filled at the ask at 249. If I sell my shares on a market order, I get filled at 248. Selling my shares, I get out at the best price at 248. Market orders and I want to get in, I get in at the best price at 249. So the bids on the left side is going to be the buyers. The ask on the right side are going to be the sellers. If I'm getting filled at where someone's selling. If I'm selling my shares, I'm selling my shares to someone who's willing to buy in on them. That's how market orders work. Limit orders, I'm basically waiting for someone to take my order. Market orders, I went and took someone else's order. Limit orders, I wait till someone comes down and take my order from maybe a market order. So again, CXAI, I do a limit order at the price of 223. I put 223, my order is now pending, and once again, the stock comes on down. I'm basically waiting for someone to say, yep, you know what, I'll sell you my shares at 223. Now, your broker is going to do all of this for you, actually the complete transaction. All you have to do is have your order set, but I want to explain, of course, how it works. Now, just like we talked about before, what would limit orders be extremely helpful for? Well, limit orders are going to be great when we're looking for dip buys. When we see that we have a very strong support line, let's say, again, the price of $2, and we know we only want to get filled right here at $2. Well, ladies and gentlemen, as we come back on down, boink, we get filled at $2. We have a perfect game plan. Now, what's the issue though? The issue, just like everything that has a pro usually has a con, is if we ever started spiking. Sometimes traders, and sometimes, even myself, I'll say, oh man, I don't want to do a market order because market orders are going to be a little bit more risky. Market orders will get you filled right away. I want to do a limit order because I want to choose the price that I get filled on. Well, guys, if a stock comes out with hot news, if a stock is breaking on out, if a stock is going on a very nice spike here, guess what? We're not going to have the opportunity to see a stock come back on down and then again get filled. The only way you get filled on a limit order is from some sort of drop. The stock has to fall to your order for you to get filled. You can't place an order up high. That would just be a market order. Market order, get filled right away. So the thing is, when you want to get involved over on these plays right here, market orders are for spikes, limit orders are for dip buys. If you try to do a limit order when a stock is spiking, you're going to place your order, the stock's just going to keep going up higher and higher and higher, and you're never going to get filled. So some people see a hot press release come on out, and they say, oh, I want to get filled on this play. Well, guys, let's think about something. If a hot press release came on out, why would anyone sell their shares down to you? It's only going to be going on up. So a lot of times, traders, we need to get filled instantaneously. Now, there is a little bit of a drawback here because you are going to realize something when you start trading. If I want to do a market order right now, I can click market order, and am I going to get filled on this play? Dunk. And I'm not going to get filled. The reason why I'm not going to get filled on this play is because you cannot get filled on market orders during pre-market or during after hours. So that's from the time of 4 a.m. To the time of 9:30, market orders will not work. Just like from 4 o'clock to the time of 8 o'clock at night, market orders will not work. So you might say to yourself, well, Deck, if market orders don't work and we're trying to find these hot press releases and these big spikes, how can I get filled in pre-market? Because I want to be able to nail these big time breakouts. I want to be able to nail this rip. I want to nail the big time spike like APLM. Like I want to get filled here. How do I get filled on this if I can't do a market order? So there is a little secret. There is a little strategy that we're going to show you. Market orders only work when the market is open. That is going to be from 9:30 to 4 o'clock. So in the next 10 minutes, market orders will open. Anytime before that, in pre-market or after hours, you have to use a limit order. So how can we basically trick the system? Because as I already stated, we only want to use limit orders for dip buys. We only get filled when the stock comes down to our order, and then of course we can get filled. Market orders are for those big time breakouts. Well, what we can do here is if I see, let's say hypothetically, we see APLM come out with a top press release. Okay, APLM comes out with a hot press release. It's at 16 cents. It starts spiking up to 20 cents. We want to get filled on this play, so we go over to CXAI, we type in APLM. We try to say to ourselves, all right, I want to get filled right now at 20 cents. We go ahead, we click buy, and now guess what? Now it's up at 21 cents. Now it's up to 22 cents. And we say, oh man, it's not pulling on back. Let's go to let's go to 23 cents. And it keeps going up to 24, 25, 26, 27. The way to cheat this system is to go over and type in an order above the asking price. Okay, type in an order above the asking price. Now, the reason why you would do this and the reason why this will work is because if you go over to APLM, you do a limit order right here. I type in, let's say, 0.31. Guys, 0.31 over on APLM, it's 0.29. It's 0.29. It's 0.30. The thing is, if I want to get filled instantaneously, I can go ahead, click buy, and I will be filled now at 0.29. The thing that happens is you place your order at 0.31. The system kind of malfunctions for a second. They say, wait a minute, why would a trader ever want to get filled at a higher price than what the current price is? That would put them in the red right away. So what the system does is, okay, well, let's just put him at the best current asking price. He tried to get filled at 0.31. That's not even the best entry you can get right now. The best entry you can get right now is 0.29. So what the system does is fill you at 0.29. So why this is helpful is because if a stock is ever spiking in a very quick manner, don't put the entry at the bids. That's where everyone's trying to buy. And obviously, if you have hot news, it's just going to keep going higher and higher and higher. Instead, put an entry above the current asking price. You will not be filled at 0.31. You will be filled at whatever is the lowest asking price. So in pre-market, when we're seeing big spikes and big breakouts and big rips and big runs and big climbs right here, team, what's going to happen is we are trying to get filled as quickly as possible. So what we have here, let's say CXAI. CXAI here, traders, we can go ahead and say, ooh, I want to imagine this play was spiking. Okay, hey, this play's spiking. No entries at 248. We can't do market orders. We know again 249. Maybe it just came out with super hot news. So we could go ahead and put an order at 254 because we want to get filled right away. We don't want to miss out on the spike. We don't want to miss out on this rip and run. So that's the beauty of it. Traders, guess what? I just click buy. I just click buy. Where did I just get filled? I got filled at the price of 248. So did anyone just see that? I again just jumped in on this play at the price of 254 limit order, but guess what? I got filled at the price of 248. How did that happen? Because guess what? 254 isn't in play. I tricked the system to get the best entry possible. Okay? Same exact thing if I wanted to get out. Let's say all of a sudden the stock starts crashing. Let's say all of a sudden the stock starts moving on down. Let's say all of a sudden things start getting really ugly in deck. I want to get out of this play. Well, remember, you can't market order out of this play. And I know you want to have the highest price possible. So I could maybe say, okay, I want to get out at 249, but that's where everyone's trying to sell. You need to get out right away. So instead of doing that, let's go down towards the price of 245. Remember, we're not going to get out at 245. We're going to get out at the best available asking price, which is going to be 248. So I click sell right here and boom, I'm out of this play at the price of 248. So that's awesome to be able to see right here. I got in at 248, got out at 248, even though my entry was at 251, and again, my exit was at 245. I got the best entry and the best exit. Now, the reason why this is so important is because you will try to buy, you will try to get involved in stocks with high volatility, high action, market orders won't work, so you need to be able to just look at the level 2 real quick, notice that a stock is about to spike, go above the ask, click buy, you're not gonna get filled out where you put, you're going to get filled at the best current price. When you want to get out, you look at the bids, you say, all right, this is most likely going to keep on dropping. Let me go a few cents under that, click sell. You're not going to get out that price. You're going to get it out at the best current price available. Now, let's talk about some other things that we may want to do really quickly. What else we want to be focusing on right here, traders, is that you might see market orders or the market. You could see it says ARCA LS. You might see that it has all these different types of orders that you could put for market. All that I use, and you might have, it might be different on yours. ARCA is going to allow you to trade in pre-market and after hours. If you go to the ARCA setting, that is going to allow you to trade from 4 in the morning to 8 o'clock at night. So 99% of brokers will probably say ARCA. If you are on TD Ameritrade, it is not under ARCA. There is a little wrench next to your buy and sell. Click that wrench. Then add what it said. Add the TIF button. There will be scroll on down, look for TIF, and then click EXT. EXT will stand for extended hours, and that's what you want to put it on. So most brokers, 99%, will have ARCA. If you're on TD Ameritrade, you need to add the TIF button and then the drop down to EXT. Then once you have EXT set, you can buy and sell underneath limit orders. Does that make sense? Now, if it is not pre-market, if it is not after hours, you can leave it on ARCA, or you can just go to auto. So Lightspeed is my broker. You guys can just go over to auto, and that will be the LSPT right here. And auto will be the best current route that you can get. So the majority of the time, traders are going to have it on ARCA, or the majority of the time, traders are going to have it on auto, or you could have it on SMART, SMRT, which will just be the smartest route available. It's not like super important to be like, oh, I want to use BATS or BATY or BOS or CHS. Most times, all you want to do is leave it on auto, ARCA, or SMART. If you're trading again at the start, if you're trading in pre-market though, and after hours, you must have it over on ARCA. Okay? Sound good? Now, what else do we have here? We also have TIF, where it says day, market day, GTC, 1 hour, 4 minutes, 3 minutes, 1 minute, 30. What is all this? Well, traders, this means how long your order would be active. So if I do a limit order, let's say I want to do a limit order at the price of 223. Okay? I do a limit order at 223 because this is where I see the 200-day moving average. This is where I see the 50-day moving average. And I say, you know what? I think that this is going to be a great opportunity to get filled. I can go ahead and put an order for a day. Now, what day means is that it will be a live pending order all the way from 4 in the morning until 8 o'clock at night. Okay? So as long as this stock It will continue to be a pending order until it gets filled from the entire day from 4 in the morning till 8 o'clock at night. Now, what happens at 8 o'clock at night if you are not filled? It cancels it right away. Well, what about this one? 30 seconds. Guys, you already know it. Your order will only be live. It'll only be a pending order for 30 seconds. 1 minute, 3 minutes, 4 minutes, 1 hour. Good till canceled. What's good till canceled? GTC means it will stay pending order forever until it gets filled or until you personally cancel it. So what, may people like? People may say to themselves, oh, Dak, I want to put an order in. I want to put a limit order in down here. Here's my limit order. And I think the stock is going to get a rapid drop in the next 5 minutes. So if it gets a rapid drop in the next 5 minutes, I think it's going to drop on down and bounce back on up. But if it doesn't do it in 5 minutes, it might just be a slow and steady fader. And, maybe it's just going to slow and fade and drop. And then maybe at the end of the day, it's going to sell on off. So you only want to nail maybe that quick little dip buy to bounce back on up. But if the stock has a slow and steady downtrend, maybe you don't want to get filled. So that's why, depending on your strategy, you may want to pick, hey, you know what? I'm only going to have this order live for 3 minutes. If I get filled within the next 3 minutes, that falls within the structure I like. If it does it, within the next hour, okay, that falls within the structure. But if it doesn't do it then, I want to get out of this play and move on. So it just gives you different options. It's going to allow you to be able to say to yourself, hey, you know what? I want to get filled on this play for this reason. I want to get filled on this play for this stock. I want to get filled on this play for whatever. Right? So it comes on down to that person for that trade right there. Now, another big thing that we need to learn about pre-market is that there are no stop losses. There are no stop losses available in pre-market. So if you are going to be trading in pre-market, you must be disciplined. You must be willing to say to yourself, hey, you know what? I need to be able to be a smart trader here. I need to use my head here. I want to make sure when I put myself in on this play, I am doing the right thing. So after you get filled over on a play during the actual day here, traders, you can do a limit order or a market order and get filled. After you do a limit order or a market order, you can go ahead and click stop. Now, stop is going to be a price that you choose that it will take you out of that play. That's pretty awesome. Because honestly, team, stock trading, the exciting part about stock trading, or I would say the research part about stock trading, is doing, again, the game plan. Making sure you understand why you're getting involved into a play, why you're looking at the entries, why you're looking at the exits. And then from there, once you pull the trigger, you should be saying, okay, it's an easy book. Because we have our entry, we have our exit, we have our target, and we have our why. So if I want to say CXAI, this is the play that I think is going to go crazy today. CXAI, this is the play that I think is going to go wild. I can go ahead, I can jump in on this play, boom. After that, I can set a stop loss, and you can pick the price you have a stop loss. So essentially, if I want to take a look over on CXAI, let's draw this on out. CXAI. Hot stock today, considered the number 2 top gainer in the entire market with an 82% gain. This play, when I take a look over on CXAI, this one is starting to spike its way on up. I know that $3 is going to be my main resistance line. This $3 is going to be my target. $3 is going to be my target. Boom. I'm jumping in, let's say hypothetically right now, because I believe we're going to move ourselves up to $3. And then last but not least, I'm going to have a stop loss at the price of $2.50. So basically what I'm doing at this moment is I'm entering at the price of $2.60. I'm looking for a 40-cent gain. I am going to have 1,000 shares. So my potential profit is going to be $400, and my potential loss on this trade is going to be how much money? $100. So I could lose 100, I can win 400, and now all I have to do is sit back and wait and watch. So all I got to do is sit back. Now, we could do a hypothetical trade where basically, it may or may not work on out. We're just kind of showing you as an example here. So if I wanted to, CXAI, I can go ahead and I could set some sort of limit orders. Okay, Deck, I want to get filled if it comes on down to the price of $2.60. Okay? If it comes on down to the price of $2.60, I can go ahead and get filled on this play. If it does come down to $2.60, I get filled. Boom. Then on top of that, I could set a stop loss. Stop loss on this play, I set at 250. If it comes down to 250, boom, I get in, get on out. $3, same exact thing. So let's see if we can actually go ahead and do a real order right here. This play is spiking pretty hard. I'm kind of nervous it's about to drop here in the next few seconds, but just as an example, I will show you what I mean. Let's just do a small amount of shares of just like 50 shares here in case we do start reversing at $3, which most likely is going to happen. So what we could do at this moment, limit order at the price of $2.79. So again, 3 cents away. Let's click buy. Now we have a pending order at the price of $2.79. Once the stock comes on down to the price of $2.79, I will get filled. So once we drop on down on the level 2 to the price of $2.79, boom, my order is now filled. My order is now filled at this moment. Now I could say, what's a good area that I would say, okay, let me get on out? Well, if the stock comes on down to the price of $2.69, that's when I want to get out of this play. So I'm going to say $2.69, sell my shares. So now I have a stop loss at the price of $2.69, where you can sell my shares if it comes on down. And last but not least, I can now put a limit order at the price of $3 to sell my shares if it goes up there. So the thing is, traders, what I'm essentially trying to do at this moment is I'm covering all my bases. I'm saying to myself, if we come on down to $2.69, I'm going to get out. Right now, the price is at $2.71. $2.70, $2.69, I'm out, my stop loss has hit. But you can see exactly what I meant as an example. What I want to show you guys, and we kind of expected that we were going to fall right around $3 here, is please don't judge me off that trade. Obviously, it was for an example. What I want you guys to realize is once we jump into a play, our heart doesn't need to be pounding. Once we jump into a play, we don't have to say, okay, what am I going to do next? Traders, all of the emotion, all of the adrenaline, that shouldn't even be part of trading. The reason why you have adrenaline, the reason why you're freaking out, the reason why you're saying, is because you don't have a game plan. You're buying in and hoping for the best. But if I jump in and say, I'm getting filled at this price, I have a stop loss at this price, and I have a target at this price, guess what? I don't need to do anything whatsoever. Once I set everything, boom, I'm done, I'm good to go, right? Boom, I'm done, I'm good to go. Let the play do what it's supposed to do. You as a trader do not make money during the live trade. You as a trader make your money during the preparation, making money during the research. If you do the correct research and say, hey, this is most likely going to happen, this is going to happen, this is going to happen, we are going to see, of course, you are going to see a lot more profit. But as long as you know the order types, you never have to face your human emotion. It's a very simple and very easy to fall into the trap of, okay, maybe this will happen. Okay, maybe I'll keep on holding. Maybe I'll add a little bit more. But if we have a game plan and we set our stop loss and we set our target and we have a great entry, right? We're all good. And we don't need to worry whatsoever at all. So I want to eliminate this human emotion out of you. I want to eliminate the fact that so many people are always getting caught up in trades and not setting stop losses and not getting out because they don't have game plans. They don't know the correct way to set orders. They don't know the right orders to use. And then, of course, once you figure this all on out, you're just saying, all right, let's let the play happen. You click buy, you have a stop loss, you set your target, and you're all good now. If the stop loss hits, the stop loss hits. You start fresh, you lose $5. If, again, the target hits, you make $500. So that's the most beautiful thing about trading. So I want to really go over all of this when you guys are placing your orders so you understand exactly what you should be doing. Where you have, again, your shares, you have your price, you know what market, you know what the TIF should be, you know your limit orders, and on top of that, limit, market, stop. These are really the main three right here. Limit, market, stop. I will tell you right now, throughout my last 10 years of trading, I have never used LOO imbalance, never used non-routable, never used primary peg. These are, again, for very special orders in case you have some sort of very special strategy. I mean, some are very simple. Market in on the open. You think we're going to have a spike right at the start of the day? Click market on open, click buy. Right when the market opens, you'll get filled instantaneously. Market in on close. Right when the stock market's about to close, you jump on in for holding overnight. So there are special orders that you can look into. But I'm letting you know that 99% of traders are going to go with market orders, are going to go with limit orders, and then, of course, have stop orders to be able to get out of a play play once that certain price hits. You can set it all good. We have our pre-market NASDAQ. We have our pre-market, which is going to be ARCA. We're going to have our normal trading, which is going to be LSPT. And then you could always just leave it on the smart route as well. Okay? So, traders, ladies and gentlemen, another, again, great one down the books right here, and we are going over to order types, and we are going to write out done with order types. Traders, I want to be thorough. I want to go through everything, and if I repeat something 1 or 2 or 3 times, it's just because I really want to embed it into your brain because of how important this stuff is. So, let's keep this party going here, traders, and let's head on over to float and volume. Now, we already talked about this a little bit yesterday, right? We talked about a little bit of this yesterday where we know float and volume are really the 2 keys for breakout. If we want to see a monster spike, if we want to see a monster rip, if we want to see a monster run, we need to have high float, we need to have high volume and a low float. So that's really the key here. Low float plus high volume. The best way that I can really think about this, traders, is when we have a very low supply of something, right? And we have a very high demand of it. It's just simple economics. I remember taking an economics course back in college, and this is what really stood on out. Right? We could think about it in today's world. The best way to understand float and volume is really just going to be thinking about today's housing market. So let's think about what has happened. We have, let's say, 3 homes available. Okay, this home, and this home. These are 3 houses that are available. And guess what we had? Back in 2017, each one of these homes were at the price of $300,000. Okay? $300,000 for a house. You know, nice, solid, very good home right here. But then guess what happens over time? Over time, we had 2020, 2021, and everyone started moving over towards working from home. Everyone could get out of their office. You can start working from home. Everyone's getting time on off. We went through a couple different things back in 2021, 2022. And now, all of a sudden, we have a drop in interest rates. We have this huge demand of people where we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. We have all these people that now want to go ahead and buy these homes. Well, guess what? Before, these homes are $300,000. But now guess what's happening? We have all these people right here all bidding for these homes. So this guy says, hey, you know what? I'll pay $350,000. And then someone says, no, you know what? I'll pay $400,000. And this guy says, nope, I'll pay $500,000. And this guy says, hey, I'll buy $600,000. And anyone going higher than $600,000? Nope. Okay, boom, sold to this young man right here. So now this home is $600,000. Okay, well that home is now off the market. So we still have all these people that are now trying to get these 2 homes. Now there's a very high demand and a very low supply. So now everyone knows, wow, the last home went for $600,000. Most likely these homes are going to be going for about $600,000. So now these homes are going $600,000. There's only 2 homes left. I gotta get one. I'll pay $620,000. Boom, sold over to this young man right here. Now guess what happens? There's less of a supply. There's only 1. This one might go even higher because all these people are looking to get a home and there's only 1. We have hundreds and thousands of people trying to buy these homes, but these home prices right here keep going higher and higher and higher because people who have money can afford to buy them. So wow, okay, that's the issue. Now again, there isn't any home. So when one does pop on the market, everyone says, how much is it? $300,000? I'll give you $700,000. So it just keeps going up, 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 as we know. And that's very wild. That's definitely very crazy to see. So how does this relate over to the stock market? Well, the way this relates over to the stock market is almost the same exact manner. We are going to see that these stocks are going to have very low supply of shares. Okay, so just like low supply of homes, we are going to have low supply of shares. And let's imagine these little dots right here are shares. Now, let's say there is only 5 million shares available. There's 5 million shares available, and all of a sudden the stock is sitting right here at the price of $2. But now a hot press release comes on out. There is positive results. Positive results are coming on out, and every single person realizes this. Now, there are millions of people in the stock market. So all of these people right here says, hold up a minute. This stock just came out with, again, positive results. I want to get filled. I want to buy some. I want to buy some. So every single person is now bum rushing this stock because they want to get shares. So what happens to the stock price? Well, the stock price is going to increase in a dramatic fashion. And anyone who is late to this play, guess what's going to happen? Anyone who is late to this stock is going to have to pay a much higher fee, a much higher price for those shares. So when things become less in demand, when things have a less supply and have a high demand, you need to pay more money if you would like to have those. So it's about the rarity, right? The rarity of these. So that's how these stocks go on such big spikes. That's how these plays are going on such big moves every single day. So as we talked about before, and let's just kind of write this on down, the float is just going to be the shares available to the public. That's what the float is going to be. The volume is the correct definition is the amount of shares traded from hand to hand. So volume is going to be how many shares are being bought, how many shares are being sold. When a stock has high volume, it has high transactions. But I'm going to give you guys a little secret. Really, the easiest way to be able to think about this, the easiest way to be able to understand volume is the higher the volume, the more people there are. The more people there are, the more demand it is. Right? So it really, you can just think about that in an easy fashion. The volume is just the amount of shares traded from hand to hand. But to me, when I see there's high volume, it means there's a lot of people looking at that play. There's a lot of people getting involved in this play. There's a lot of movement, right? Because at the end of the day, it comes down to movement equals money, right? When we have a stock that is going on a very hot move, spiking on up, dumping on down, we can make a lot of money towards the upside. We can make a lot of money towards the downside. When stocks are going sky high, when stocks are crashing on down, we can make a ton of cash. And that's where the beauty comes. So we want to be able to see this fast, hot, awesome moves because that's where the money is. So when I take a look, let's go ahead and take a look on some examples here today. CXAI. Let's head on over towards CXAI right here. Let's grab this. Let's go over, CXAI, Yahoo Finance, okay? So CXAI, we go over to Yahoo Finance, and we can see that the average volume is on 613,000 shares. That's the average. On a normal day, we get 613,000 shares. The volume today is 46 million. Traders, you guys can see the difference. You guys can see the craziness right here. You guys can see how wild and how nuts this is at this moment. To see that we have this crazy amount of volume, that is nuts. So we can obviously tell that this stock is in demand. Now, what we also want to do at this moment, because a little side note, let me backtrack here. Everyone always asks the question, well, what's a lot of volume? How do I know what's a lot of volume? Well, there's no specific number. It is how much more is it than the average volume. That's how we're going to be able to learn. That's how we're going to be able to make money. So let's go over to the statistics now, and we can scroll on down and we can see the float. Well, traders, you can see there's only 10 million in float. So really the answer that we want to be able to realize is, well, what's low float? And there are numbers, of course, that we could be able to pick for low float. So if I want to say what is a low float is going to be 5 million and under. Right? That's going to be very low float. Solid, or again, still could go on very big spikes. I'm going to say 5 million under is where you can get those monster breakouts, right? 5 million to about 15 million is where you can get very nice spikes, but they're just not going to be as crazy. So spikes, very solid still, right? You see under 5 million float, things can get crazy. 5 to 15 million, I still like it. It's still very good. Then we go 15 to 30 million. Expect things to be a little bit, this is going to be like average. Maybe you can get a rip, maybe you can get a run. And then 30 million plus is usually where things are going to be slow. Now, there are some certain exceptions. Now, the certain exceptions that I want to talk about are going to be, number one, if I am talking about float, I am talking about stocks a lot of times that are between the prices of $20 all the way on down towards $2. We're talking about the stocks that are usually the top gainers every single day. We know CXAI has 10 million in float. So CXAI, 10 million float, it's a good, nice low float. And obviously we can tell that CXAI has gone on a very nice spike last night, ripped on up this morning. It's very very active. Now, you will notice though, like Apple and Tesla and Nvidia will have hundreds of millions in float. That's because they're a blue chip play. I'm referring to more of $20 and below. Now, you might also see a lot of times that a stock that is sub $1 might have a larger float, but is still moving very well. Why is that? Well, traders, let's actually think about this here for a second. If we have a stock that is sub $1, okay? So a stock that is only a $1, or let's even make this, a stock that's 50 cents. What is the float again? The float are the shares available. So the shares that are available for us. Okay, cool. Well, if a stock is only 50 cents, well, I can afford a lot more shares. If I can only, let's say on a normal play, afford 1,000 shares, potentially on a stock that's 50 cents, I might be able to afford 10,000 shares, right? That makes sense because it's cheaper, so I can buy more shares. So if I have a larger float, that's okay because the stock is so cheap that float is still going to get gobbled up extremely quickly. So, that's what I want you guys to realize. You might see a stock with 45 million in float and say, oh, this one's not going to spike hard. But if it's only 25 cents, 50 cents, guess what? You can buy more shares. So essentially, you are going to be making that float kind of get diminished much quicker because it just is more of an affordable price. Does that make sense? So you could still be looking at, and like what spiked today? We had, what was the breakout here today? Let me just take a look real quick. APLM. This play went on this monster spike, came crashing on down. Let's just see what that float was today real quick. So let's head back on over to Yahoo Finance, go over towards APLM, and let's just see what the float is. It might be low, it might be a little bit higher, but I just want you guys to realize that it's okay because it's such a small play here. So let's go over, click statistics on the sidebar, scroll on down, go to float, 39 million. So you can see it's not the smallest float in the world, but the thing is, it's just such a cheap price that people are still able to gobble this up so quickly. So APLM right here, this is the play that basically had a large gap up, just came crashing all the way back on down because of that float. So that's the way that we could be able to understand the float and volume. Now, something that is also very important is when we're talking about volume, people want to understand how can we see volume? Like, Deck, you say you only want to buy stocks that have good volume. You only want to get involved in plays that have good volume. You only want to trade stocks that have good, solid volume because volume equals activity. Activity equals profit. So we already know one way to be able to see volume is by looking over on Yahoo Finance and realizing whatever the average is to the current volume, that's going to be able to make us a lot of cash and that's going to be able to make us a lot of money. But what's another way that we could be able to see volume? Well, guys, we could see volume right on a level 2. So when I get involved on a play, I want to be looking right at the level 2 and I want to see that there's orders. I mean, let's just take a moment here. We take a look at the level 2. I see that there's transactions. I see that there are orders. I see that the bids are moving, the ask are moving, the price is moving. I see that the time in sales is moving. I see that the stock is up 85%. I can see that the volume is moving on up as more orders are coming on through. I know I can make money on CXAI, right? Because there's movement here. It's more fun. Well, traders, let's go to a different play that maybe doesn't have as much volume. Let's go over towards, ANTE here. Let's type in ANTE and let's see what happens to the level 2. ANTE. Hello? Hello? Guys, you guys can see what I mean. Why in the world would I ever buy ANTE? Unless I'm doing some sort of crazy long-term investment, there's no money to be made here. I can't tell you how many times people buy these type of stocks and they ask me, oh, Deck, I just jumped in on ANTE. I just jumped in on, let's just type in another stock, RCAT. Deck, I just jumped in on RCAT. What do you think about it? I think you're going to be sitting pretty bored for the next few hours to maybe the next few days. There's no orders going through. There's no movement going through. There's no hype. There's no excitement. You can't make money if no one's there. So traders, all right, think about it as almost going to a party, right? If I wanted to go to a party, I want to go to a party, and most of the time where, again, I'll say if I'm going out and I'm in the mood to go on out, I want to go out to a place that's fun, that's lively, that other people are there. People are, again, excited. The energy is good. People are, having a good time. Guess where that it's at? right here, team, that right here is going to be at the top dog of the day. I want to say, you guys want to party? Let's go over to CXAI. Woo! I'm having a good time. People are dancing. Energy is good. Money's good. Music's good. Everything is, again, feeling absolutely awesome. If I go over to a party and it looks like, this DTC, it's like walking in and saying, where the heck is everyone? Right? You're just sitting there alone. It's not going to be a lot of fun. Now, sometimes, again, being alone is fun, but I mean, not for this example. Right? So what we have here is I want you guys to realize that's the number one way that I look at volume is just by seeing are there actual orders going on through? Is there actual, actual activity? Because as we have stated, volume equals activity, activity equals profit. The more stocks that are moving, the more money we can make. Movement equals money. Stocks that go up, we can make money. Stocks that go down, we can make money. Stocks that move sideways with no orders whatsoever, there's no money to be made. So it's the number one question I get. People say, oh, what do you think about this play? Oh, it's garbage. Why? Because it's not moving. What do you think about this play? Garbage, not moving. What do I think about this play? Garbage, not moving. I want to play stocks that are actually going to be able to produce me a profit. So that's going to be great. Another way that people look at volume that I rarely ever do is by looking underneath the chart, and you could see these like big volume spikes, but a lot of times those develop after the move has already happened. Now, the only thing that I do like sometimes is by seeing like an uptrend or a downtrend in volume. Sometimes you could see, oh, we're about to get a drop because we see volume getting weaker, or hey, we're about to get a spike because we have an uptrend in volume. Sometimes that could be extremely helpful to you, but a lot of times underneath the chart, I don't usually look at this too often. Maybe give it a little sneak peek if I do see, we're downtrending in volume or uptrending in volume, and that could definitely help, to figure out what could be coming up next. But the majority of the way that I look at it is I compare the average volume to the current volume on Yahoo Finance, and then I take a look over on the level 2 to be able to understand what's going to be happening right there. Sound good? So, traders, that is going to be the biggest thing out of float and volume. Let's wrap that up, baby. Woo! Let's throw it on done right here. Oh, yes, I love it. Guys, we're cooking right here. We got through 2 sections already within the first hour, basically, again, sitting with about 30 minutes with each section. So if we just keep this on up, we're going to have 30 minutes on indicators, 30 minutes on level 2. That's another hour. 30 minutes on psychology, 30 minutes on how to find hot news. That's another hour. 30 minutes on mob shifting. Okay, maybe I actually do have to hurry up a little bit. Okay, I know. I got this 3-day time frame, crunch with you guys. 3-day time frame crunch. We're trying to get through it all. We've gone through a lot already, but we want to keep this party going. So let's, again, not waste any time, and let's go over to our indicators. Now, this is something that every single person absolutely loves. They always ask, Dak, what is the best indicators? All right, let's again talk about it. Okay, let's talk about our indicators. Let's talk about what we want to see. There are going to be a few different indicators that we really want. Okay, we are going to have our overlays and we are going to have our oscillators. Now, what we have right here, team. Let me just get it all good right here. All right, this is what we're going to have. Our overlays and our oscillators. Now, it's like, it reminds me of like SpongeBob, eels, ladders, eels. So what we have at this moment, overlays and oscillators here, team. What we have at this time, overlays are going to be on top of the candles, okay? So when I take a look over on the S&P 500, we are going to have this red line, this blue line, this green line on top of the graph. These are overlaying on top of the graph. Oscillators are going to be underneath or above the graph. And there are going to be a few that we definitely like to use. So the best and the most important ones are going to be the most popular ones. I'm going to say something right now that I want every single person to write down. There is no such thing as a super secret indicator. Sometimes I see advertisements. Sometimes I see people say, ooh, learn about my super secret indicator. Traders, let's think about this in a human psychology type of way. If every single person uses the 50-day moving average, that means there will be power behind the 50-day moving average. If every single person takes a look at the S&P 500, puts on the blue line, the 50-day moving average, and every single person buys at the blue line, 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 that blue line is the best indicator to have. If every single person uses the blue line, we want to use the blue line. The issue is sometimes people say, ooh, I like this indicator. No one knows about it. It's super secret. Guess what? That indicator is absolute garbage. Because the thing is, why are we using an indicator that nobody else is using? Let's think about this, team, psychologically. What moves stocks up? People, you and me and the group of traders. If stocks are moving up because people buy it for a certain reason, we are going to see an increase in price. If a stock goes down, it is because people are selling it for a certain reason. So if every single person says, oh yeah, I use AKA this blue line, the 50-day moving average, and every single person on the chart uses the 50-day moving average, then every single person most likely is going to be buying the dip at the 50-day moving average. And in this case, it has worked every single time over the last 15 years. So what I'm going to teach you guys here today is going to be the most popular indicators, because these are the indicators that I use, because these are the indicators that have the highest power, the highest force, the highest amount of true help in the market. If anyone ever tries to tell you, oh, I got a super secret indicator, say, I don't even want to hear it. La, 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 la. I don't even care. You can't even pay me to use your indicator, because the thing is, it's not going to be helpful whatsoever. We want to use what everyone else is using. Now, the thing is, traders, if all of a sudden one day we wake up and every single person changes and says, oh, I want to use this indicator now, then guess what? That's the one I'm going to start using. But I'm going to tell you the most popular ones, because those are going to be the best ones. So what we are going to want to be using is on the overlays, we are going to be using the 50-day. Let me get this going here. Oh, hold on a second. All right, all good. We want to be using the 50-day simple moving average. Now, this is probably going to be the SMA. 50-day simple moving average. 50-day SMA, you'll see. We are also going to want to use the 200-day simple moving average, which is going to be the SMA as well. We are also going to want to use the 13 exponential moving average, which is going to be the EMA. We are also going to want to use the volume weighted average price, aka, what is this, guys? The VWAP. So these are going to be the top 4 most popular overlays there are. Now, 13 over time, the majority of people are actually using the 20 EMA. So 13 and 20, you will see maybe like a penny difference. It doesn't matter which one you put in. They're going to be nearly identical. There will be maybe a 1 to 2 penny difference. But if you use 13 or 20, when I first started trading, everyone was using 13. But now when I read textbooks and things along those lines, everyone says 20. So this is why we want to use 50-day SMA, 200-day SMA, 13 or 20 EMA. They're going to be very close anyway. And volume weighted average price VWAP. Now, we need to break this down even more. What we need to break this down in as daily chart only. So this will be 50-day moving average is going to be on the daily chart only. The 200-day moving average will be on the daily chart only. The 13 or 20 EMA will be on the daily chart only. And then the intra-day chart, which will be the what? The 1 minute, the 2 minute, the 5 minute, the 10 minute. This is when we want to be using something else. We could go ahead and use the volume weighted average price. So daily chart is going to be different, little heads on up, than what we use on the 1 minute, 2 minute, 5 minute, and 10 minute chart. Let's explain why. Okay, let's go over this right here. Let's go over towards our 1 minute time frame. Okay, and let's go over to indicators. Let's type in right here. We can go over to our SMA, moving average, simple moving average, and let's just type out our 50-day moving average and click add. Okay, awesome. On our 1 minute time frame, okay, our moving average is at the price of 537.10. So let's remember that number, 537.10. But now, if I switch on over towards a different time frame, my moving average is now at 536. Hold on. I thought the bounce play was going to be at 537, but now I'm in a different time frame, so now it's at 536. So hold on. So now I go over to a 5-minute time frame, and wait a minute. Now it's at 535.20. So how is this helpful to me? It's not. It's not helpful if every single time I change my time frame, it's giving me a brand new number. It's making it more confusing than anything, because I thought it was going to bounce here. But no. This guy in a 5-minute chart says it's going to bounce over here. But no. This guy over in a 2-minute chart says it's going to bounce up here. So that's why this is very confusing. And the same thing changes with the 50-day, with the 200-day, with the 20 EMA. That's all going to change. But I want to show you something actually very special here. So let's go over and turn this on off, our EMA, or excuse me, our SMA here. Now let's go over to our VWAP. Now our VWAP is going to be right here, team, a 2-minute chart at the price of right around 537. 537, we have our VWAP indicator. Let's switch on over to a different time frame. It's still at the same price, right next to 537. Let's switch out over to a different time frame. It's still at the same price, right around 537. Let's go back to a different time. It's still at the same price. So can you see how this is helpful? If I say, hey everyone, get ready for a dip buy off the 50-day moving average, and we're all on different time frames, well, guess what? That is now splitting up the mob. It's splitting up the majority of buyers. It's splitting up people, starting to cause confusion. But if everyone is using the VWAP, everyone's saying, oh yeah, 537, yep, I have that too, I have that too. Now we have a greater force of everyone buying at the same time, which is why we had a dip buy here, and 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 now again, a dip buy before. So it's going to be much easier to be able to see all that. So that's why, again, we only use our moving averages on the daily chart or higher when we're taking a look over on these plays. So when I'm looking at, let's say, the SMA or the EMA, I'm, again, taking a look on that on the daily chart. Now, yes, sometimes I even go to a weekly chart or a monthly chart. The larger the time frame, the better the force it's going to be. So I do want to be able to break down what these moving averages are supposed to do, what's the point of them, or how they help us. In all simple reality, these overlays are just going to be another line of support and resistance. That's what they're going to do. They are going to help us understand where dip buys, where reversals can happen. And I do want you guys to know, the larger the time frame, the stronger, right? The stronger they will be. So daily chart, we do have 50-day, 200, and 13 or 20 EMA. Whenever I see a play coming up towards these areas on the daily chart, I always say, hey, you know what? Let's get ready for a small reversal. Let's get ready for a bounce play. If we're coming down to it, we can start moving on up. But as I said before, if you switch on over to a monthly chart, you will always get much better bounces because it's the largest time frame you can have, right? If I take a look at Apple, 50-day, 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 and even the 13 EMA, the green line is absolutely perfect, right? We can go over towards like Tesla, or let's go over towards like, Amazon or Meta. You guys can experiment here. The 13 EMA, bounce play, bounce play, bounce play, bounce play, bounce play, bounce play. This is a great way to be able to trade on large, scales, on large time frames for large investments. Now, the 50-day and 200-day moving average are going to be probably the most popular. The 20 EMA or 13 EMA, these are going to be what I always like to call, and I'm going to turn off the 50-day moving average here for a second. Let me go over to properties. Let me go over to show indicators. Let me go over to something else though. Oh, right here, indicators. And let's turn off the 50-day, remove. Let's turn off the 200-day moving average. I think that this is one of the best ways, the 13 or 20 EMA, for long-term investments, or even just like swing trades. The reason why that this is so great is because this is what I call the flexible trend line. Okay? We talked about trend lines yesterday, didn't we? And what are a trend line? What is a trend line? A trend line is just going to be telling us when a stock is considered bullish and when a stock is considered bearish. That's what a trend line does, right? So make sure you guys study yesterday if you guys haven't. Now, if I wanted to do a long-term investment, and I want to get involved in Amazon, all I have to do is say to myself, as long as we stay above the bullish side of the 13 EMA, I know I can keep on holding with no concern whatsoever. Has anyone ever jumped into a play before and you get so nervous, you get so scared? Even a long-term investment, you get so nervous, you get scared? Well, everyone take a look at this green line. Let's eliminate that fear. When you guys, again, take a look at that green line here. Green line, we are bullish, 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 we are bullish. Now, we are bearish, right? Here, we are bearish, don't want to be in, bearish, don't want to be in, bearish, don't want to be in. But now guess what? Back to the bullish side. Now we're bullish, now we're bullish, now we're bullish. So the thing that we can get out of this is as long as we hold above that 13 EMA, we have nothing to be concerned about. You don't have to be nervous. You don't need to be freaking out. You don't have to have your emotions. You are going to realize, hey, we're good to go. And then as you guys can see, when we are bearish is a time that we don't want to be involved in on these plays because they're not going to be very good. This is where we're saying, oh, it's underneath the 13 EMA. I don't want to be involved into it. I know I'm bearish over on this chart. It's not going to be helpful. Then I could go over here to the bullish side of that 13 EMA. And I can say, wow, this is extremely helpful because it's going to be able to show me when we are considered, on the positive side. So if I want to get involved, I want to get involved in Facebook. I want to get involved in Meta. Well, traders, what can I see when I take a look over on Facebook and Meta? I can jump in on this play and be able to trade with confidence saying, okay, nope, don't have to have any fear. 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 Okay, guess what? We have just rode this up for 1, 2, 3, 4, 5 years. Okay, beautiful. Now there is a year where we are underneath the 13 EMA. I don't want to get involved, right? But what can you guys see? When we are bearish underneath the 13 EMA, get out, don't hold. The moment we flip back over to the bullish side of the 13 EMA, you're good to go. You don't have any concerns whatsoever. So when we're above this line, we move up. When we're underneath this line, we move on down. And that is what is going to be so helpful about this indicator. So just by understanding these overlays here, just by understanding where we're at, just by understanding, okay, hey, we have the 50-day, the 200-day, the 13 and 20, EMA. Then on the intraday chart, the 1 minute, 2 minute, 5 minute, 10, the VWAP is going to be extremely helpful. Guys, why is the VWAP helpful? Because it doesn't change its price every, time frame. These are going to change their price, the SMAs and EMA throughout the time frame. And the larger the time frame, the more strength we're going to have. The point of these are going to be support and resistance, aka reversals and dip buys, aka pivot points. And the 13 EMA is also going to tell us again when we are just going to be on great swing trades or long-term investments on bullishness and bearishness. Does that make sense, everyone? So we have that. Now, another great way to be able to trade is going to be our oscillators, which are going to be our RSI and are going to be our MACD. Now, the RSI is going to show us when a stock is overbought and when a stock is oversold. Anything that is above the price of 70 is overbought. Anything that is under the price of 30 is oversold. What do we know, guys? When stocks are overbought, expect to see selling. When stocks are oversold, expect to be a dip buy and expect to see buying. So, what do I mean by this? Everyone, let's go over. Let's take a look. So if I wanted to go over towards Meta here, let me get rid of everything. I'm going to turn off the other indicators. So let's go over to our indicator tab right here. Let's delete, everything else. Let's delete volume. Let's delete the EMA. We just have an empty chart here. Now what we can do is we can scroll on down and we can add the RSI. The RSI is always going to be set to the 14. That's just the default. That's just what it is. Okay, so always set it to 14. Then we click add. Now what we could see here over on Meta is going to be a little box underneath. And what we have here, as you guys can all realize, I'm going to move this off a little bit more towards the side so I'm not blocking it whatsoever, is we're going to take a little bit of a screenshot here. We could see when we take a screenshot over on this play, we have our 80, we have a 71, which is the current price, and then we have a 40 right here. As you guys could imagine, it really does come on down to just a very easy simplicity. I'm actually going to save this picture and we're going to bring it over into Paint so I can draw some super straight lines to even make it a little bit easier here. So let me just save this here. Come on over, bring up Paint, which is one of the best softwares ever created. Okay. So we're going to bring up Paint here. And now let's just think about what we have. All right, so I want to make this a little larger. Perfect. So what we have here is we are going to be having a line going across the board at the price of 70. Here's a line going across the board at the price of 70. Let me just make sure this is straight. Boom. That is straight right there. Then we are going to have back on down towards around the price of 30. Okay? So here are two lines that I'm putting. This makes it easy for us to understand. Anything, right, that is above this line is considered overbought. Anything that is underneath this line is considered oversold. Now, let's just, fill in the gaps. Let's just fill in the circles here. When we are overbought, and we can just put this, let's just put it in red here. When we are overbought, here's an area of near overbought. Here's an area of near overbought. Here's an area of near overbought. Here's an area where we are considered overbought. Here's an area where we are considered overbought. Here's an area where we are considered overbought. Now let's correlate this to the chart and let's see what happens. So if I again grab this, I'm going to turn this into a little bit of a different color. Let's just go to like let's just go to a purple color. And let's go from where we are overbought and let's go straight on up. Traders, what has happened? We were overbought. We went straight on up. What happened over the next few days, next few weeks? We came crashing all the way back on down. Because guess what happens when we are overbought? Well, traders, we obviously have room to fall. We have room to sell on off. We have room to drop. Take a look at what happened when we are considered overbought. Well, everyone knows that we're overbought, so we start on falling. We start on dropping. We start getting weaker here. That is where we are overbought. So this one, we still had a little bit more room of climbing. But eventually, obviously, you could still see we did get that sell-off and that drop eventually. What did we get right here? Overbought. Few day pullback. Here we are considered overbought. Guess what happened? Few day pullback. Guess what happened? We're overbought. Few day pullback. Pretty interesting to be able to see this, right? Pretty cool to be able to see this. Now let's go with the opposite side. Let's go over with, we're becoming oversold. Well, oversold right here is going to be, there's again oversold. Here is right next to oversold. Here we're very oversold down here. Here we're near oversold. Here we're oversold. Let's connect the dots. Let's see what happens. Let's just go with, let's keep it with this blue, and we could just rock and roll here. We're considered oversold. Is it funny that buyers start moving on in? We start moving ourselves on up. Here again, we're oversold. Buyers start moving on in. Guess what happens? We start moving our way on up. Here we are considered oversold. Buyers start moving on in. We can start moving ourselves on up. Here we are considered oversold. Buyers start moving on in. We start moving ourselves on up. Can you start seeing how people start predicting the stock market? Can you start seeing how people are realizing how they can make money in the market? Can you guys see what I see? I mean, this is incredible. This is insane. We have VWAP, moving averages, RSI, basically telling us when the market's going to go up, when the market's going to go down, where again things are going to be heading towards next. I mean, this is pretty remarkable here. So we can see that over on the RSI by looking at the chart. Now we also have another indicator which is going to be extremely important for us, and that other indicator here, let me grab this, bring this back on over, is going to be the MACD. Now the MACD is just going to have a bullish line and is going to have a bearish line. And really all that you got to think about it is this bull line and this bear line are going to fight. All right. Now I'm going to think about a little bit of a childish example here, traders. Has anyone ever seen The Lion King before? And have you ever seen the part where Simba and Nala are wrestling? Now, how do you know who wins when Simba and Nala are wrestling? They're tumbling down the hill and it really comes on who pins the other. Who's ever on top? Pinned ya again, right? If you guys don't know what I'm watching, go watch The Lion King. Have a childhood. So, how do we know who wins? It is whoever is on top, whoever gets pinned, okay? So whoever is on top is currently the winner. Now that's the same exact way that how the MACD works. We're gonna have the bullish line, we're gonna have the bearish line, we're gonna have Simba, we're gonna have Nala. Whoever is on top is currently the winner. So let's go over, we can click our indicators, let's get rid of the MACD, or excuse me, rid of the RSI, and let's add the MACD here. So the MACD, we are going to add right here, boink. And now, as you guys can see on the bottom, we are going to be having these two lines. Now, these two lines, one is going to represent more of the bullish side. One is going to represent more of the bearish side. So I'm going to do the same exact thing, and we're going to bring this on over, place this in Paint, and then we can get a better understanding of really how this works. So let's go over, let's grab this, let's put this right here, bada boom, bada bing, and put this on up. And here is the MACD now. So the MACD, what it shows is that whenever we have this gold line, okay? So the way it works at this moment, the way that I'm seeing it at this time, is going to be the gold line is going to be bullishness. We are going to be having the blue line is going to be bearishness. Now, obviously, you can change this just the blue and red. You can change this to green and red. You can change the colors to whatever you want. But as you guys can see, is that whenever the gold line is up on top, here's the gold, all right? So here's the gold moving on up. Take a look what's going on with Meta. Meta is also moving its way on up. Now, can you guys see what happens when we transition? When all of a sudden the blue line starts getting on top. When the blue line starts getting on top, we start actually seeing a transition towards the downside, right? So we start getting a transition to the downside until, guess what happens? Go down here until the gold line gets on top. Now, once the gold line starts getting on top, what can you guys realize? Well, now we are considered more on the bullish side. So now again, on the bullish side, we start moving ourselves on up until again, the gold line starts retreating, and now the blue line is on top. And as the blue line is on top, guess what happens? We start fading on falling until again, guess what happens right now? The gold line is on top. And as the gold line is on top, we are starting to move ourselves on up. So this is, another way to kind of see when are we overbought, when are we oversold, who is currently in control, the bulls or the bears. So if we wanted to kind of break down everything here, traders, there are traders that do this. There's going to be traders that, their normal chart is going to be looking like something like this. They're going to have the MACD up, which is absolutely fine. They are going to go over to indicators. They are going to put the RSI on. RSI on and the MACD. Perfect. I like that. If this is what your chart looks like, and you're saying, hey, we're bouncing off oversold. We're also going to be, not yet, we don't have yet, but maybe the gold, aka the bulls, are going to start taking control here very soon. This is starting to give you some good ideas. MACD is going almost bullish here soon. At this time, you can see bears are still in control, but bulls might be moving on in. We're also bouncing off oversold territory, so bulls also might be moving in as well. Once this crosses over, that would give me confirmation. Hey, I like that if that's the way you're thinking. You can also go to EMA, put this to 13 or 20 and say, all right, hey, I want to be able to put this on. I always like using a lime green color for my EMA. Boom. All right, let me add that. I like that now. Let's go to SMA. SMA, I always put it for 50, dark blue. Let me add that. Boom. And then I also have the SMA 200 modify colors. Let me go right here. Add this 200. Let me add that. Boom. And I'm all set. Then, of course, over here on my minute chart, I only have the VWAP. So if you are, again, a trader that says, this is how I want to start looking at my charts, I think that this is 100% acceptable. We have 3 overlays, which are going to be extremely helpful. We have one chart, one over on our minute chart, and we have 2 underneath the chart. The issue, guys, is this would be max. This is max. You don't have to have the RSI and the MACD. You don't have to have the 13 EMA and something else. This is maxed out for me. VWAP, this and that. The issue is where people start adding even more now. They add this, and 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 they add this. And the next thing you know, you have no idea what you're even looking at. Traders, sometimes, again, things just start getting too crazy. Things start getting too wild. And you say, oh, wow, hey, yeah, Deck, I'm a stock trader. Ha! Right? This is not the right way to read a chart, because you are just going to do what? You are going to confuse yourself more than actually help yourself. You are going to confuse yourself rather than actually becoming a helpful trader. If you have this many indicators, you are doing something wrong. Stick with the most popular indicators. The most popular indicators are going to be the strongest. That means probably stick with I would go with 3 indicators, 4 at the most. 4 indicators at the most is what I would want you guys using. Because really at the end of the day, remember, it comes down to simplicity. Yes, we can have the RSI be able to help us understand when a dip buy might be coming. But we're also, again, wanting to look at where is that dip buy off of past chart history pattern, right? We also want to say to ourselves, okay, hey, past chart history pattern showing us the dip buy off simplicity. That's great. But it's also, again, helping us to realize that the MACD, we are starting to go bullish. Kind of just gives us that extra sense of confidence. So we don't need to have millions and millions of indicators. What we more want to do is more look at the chart, read the chart, understand the volume, and then just have those little indicators give us that little extra push to show us that we are in the right way. Okay? So I want you guys to be able to understand all of that. Gorgeous. And ladies and gentlemen, we're going to be wrapping that thing on up, going on over towards our boot camp. And let's write out done for indicators now. Oh baby, oh baby, oh baby. So done over on the indicators. Gorgeous stuff there. Boom. Now, we're moving on to something new. We're moving on to something else. Traders, let me make sure that you guys are all again studying on up at this time. Who here at this moment is, again, their hand is starting to cramp from taking so many notes? Who here at this moment is saying, Deck, I have a whole entire Word document. I have an entire notebook that's already filled. I'm trying to go through as much as I can. Who here at the moment is taking in this information and saying, all right, hey, this is filling all the gaps that I needed. I knew a little bit about trading, but now I know a lot about trading. Oh, Deck, this is a great refresher for me. Or, hey, Deck, I didn't know anything about trading, and now, again, I'm getting that next level on trading. So I want to make sure that you guys are good. Hit me over in the chat room right now if you guys are with the good old Deckmart Trades. Ahoo! Wake up, traders. We got some time here. We want to make sure that we are crushing it day in and day out, baby. So let's see what we have at this moment. We are going on over to our next phase here, and this is going to be our level 2. So level 2 at this moment. This is a big one. Now, when we are learning about level 2, it is all about right here. Okay, this is what the level 2 is. Now, why is level 2 so important? Level 2 is going to basically be seeing the road of the stock in front of us. I always think about it's like having a windshield in a car. You can't drive a car without having a windshield, right? It's not like Ricky Bobby where you could be like, feel the road. Next thing you know, you are driving into a house. If I don't have a level 2 when I'm trading, I really can't trade. The level 2 is going to give me the information I need on what is that stock going to be doing next. Now, we talked about this before. We talked about charting. Charting is going to give us the preparation. Okay? When I want to get involved into a play and I say, all right, I'm getting involved on the S&P 500 at this reason. Why am I getting involved on the S&P 500? I see an old spiking high, an old spiking high. Here's a dip buy, here's a dip buy. Here's going to be great support. Support is going to be back on down towards the price of 530, 550, right? We can all see that. That's nice, simple, and easy. We have an old spiking high, dip buy, dip buy, dip buy. Stock is starting to form a little bit of a downtrend. We have weakness. I want to get filled at the price of 530, 550. Okay, that's going to be nice for us. That's going to be right above the 13 EMA as well. This is going to be awesome. Charting is going to allow me to develop and figure out a plan. It's going to allow me to actually be able to say, all right, this is the plan I want. When I actually execute the trade, I am going to be strictly watching the S&P. I'm going to be strictly watching the S&P 500 on the level 2 to see where buyers and movement is moving in on. So really, the charts are to help us find the play, help us find our strategy, help us find what we want to be doing, help us put together the trading plan. The level 2 is what we look at while we're actually in the game, while we're actually in the play. So for instance here, team, imagine if I was a basketball coach or I was a football coach. I might watch, prior to the game, or a week beforehand, the team. I might watch the team that we're playing and say, what do they do? Okay, they do this, they do this, they do this, they do this. I want to study the team to be able to figure out their plays, how they work, what we can do to defend it, and how we can have success. But during the actual game, am I going back and watching film from last week? No. During the actual game, I'm in the game. So team, this right here helps us understand the past. This right here helps us understand the present. And that's what I want you guys to gauge. So let's take a screenshot of the level 2 and let's break down what the level 2 is. All right, awesome. So the level 2 here, this was probably the toughest thing that took me the most time to learn when I first started. All right. When I first started, I thought to myself, this is very confusing. And it was tough for me to learn. But I want you guys to realize it's not as confusing as you think. And I know when your buddy walks over, when your husband walks over, when your wife walks on over and they see this moving and you're just sitting staring at it, it's impressive as well. They're like, do you know what you're even looking at? It's like, yeah, I know what I'm looking at. So we want to go ahead and break this on down and have you guys understand what is happening over on this. So when I take a look at this, take a look at the level 2, at the very top here is just going to be the company's name or the ETF name. So here is the S&P 500. Right here is going to be the ticker. So the ticker is the SPY. Now underneath this is basically just going to be a box of information, right? Box of information, as in right here is the high of the day. This is the highest price point that it has hit throughout the day. Here is the lowest price that it has hit throughout the day. Here is the previous close on the day. This is where it closed last night. So the close, where it closed last night. Now, why are these price points important? Well, I want to know, how high did we go up to today? This is also going to be holding up as resistance. How low did we fall on down to today? This is going to be holding up as support. This is going to give me the overall range on the day. Okay, hey, I see this. I know we've moved $2 on the day from the lowest point to the highest point. It helps me understand how much movement we've had. I also can see our previous close on the day, saying, okay, hey, we were at 533 yesterday. We hit 538 today, and we're heading up towards 536. We obviously had a gap up overnight. And now again, we're sitting at the price of 537. But the open of today is at 536. So the open was at 536.53. We fell on down only 20 cents from the open. So basically the entire day is green so far. We had a high of the day of 538. Okay, so basically just not even looking at the chart, we had a gap up overnight, a small drop at the start of the day, and since then we basically have just been sitting up. Am I correct on this? We had, again, S&P 500 open on up, small drop at the start of the day, and basically we have been just sitting on the upside. So just by, again, having this information is already giving me an idea of what the chart is doing. We are currently up $4.15 on the day. The last order that went through was at the price of 537.42. That was the last order. The amount of shares, the volume on this has been 10 million shares that have gone on through. You can change how you read that on the volume. And then the percentage on the day is, what is the percentage that we have gained? 0.78%. So really, just taking a look over on this top box right here, is there really anything that's too confusing? No, shows me the high of the day, the low of the day, where we closed out yesterday, where we opened up this morning, how many dollars were up today or down today, the last order that has gone through, the volume on the day, and the change of percentage. Guys, you guys don't have to be confused about this stuff. This stuff's easy. Right? It's very simple. It's very, it just gives us some information to be able to build this picture in our mind of what the S&P 500 has done so far. Now, we could break this down even more. Anything that is on this side, okay? So anything that is on this side is going to be the bids. Now, what is so important about the bids is AKA, these are going to be the buyers, okay? So anyone who is buying, who wants to get involved over on this is going to be the buyers. The left side are all people that want to get involved over on the S&P 500. And these guys are all doing, as you guys know before now, limit orders. These are all limit orders of people wanting to buy in on this play. Now you see ARCA, BATS, EDGX. These are all just different routes that people are putting their orders in. Remember, I told you about ARCA. ARCA, this is one way to get in. BATS is another way to get in. EDGX is another way to get in. This right here, guys, doesn't change anything about the price. This is just the route. This is just the route that people are, again, placing, their order through. That's it. So that's not really changing anything whatsoever. You can also see that this is how many orders are going through that route. Again, it doesn't change anything about the current price. We have all the information we need right here by showing us what is right? What is the current price here? This is showing right here, team, what these people are ordering their limits on. 537.40, 537.42, 537.42, 537.41, 537.41, 537.41, 537.41. This is again just letting us know the current prices. Now, as you guys can imagine, the opposite side right here is going to be the sell side. So what we have over here, team, is these are going to be not the bids. This is going to be the ask. And the ask is going to be the sellers. So when I see these are all people limit ordering, wanting to get out of their play, and they want buyers to say, hey, you know what? Come and get these orders. The way that this is navigated is you are going to have the best price, right, that you can go over and sell your shares to, and this is the lowest price that you can go ahead and buy your shares. So it's basically saying that the way that this level 2 is organized at this moment is that it is showing right here. This is the highest order that someone is willing to buy shares of the S&P 500. This right here is the lowest priced order that somebody is willing to get out of their shares if you want to be able to take it. So if you want to get in on the S&P 500, right here is the cheapest order that you are going to get. It's basically by filtering out, like you go to Zillow and you want to see all the houses, you are filtering it out by lowest price first. Right? You want to buy a car, you filter it out by lowest price first. Let me see the best possible cars I can get for the lowest price. This is the best shares you can get for the lowest price on the S&P 500. Same exact thing. If we wanted to go with, all right, hey, this right here is the highest someone's willing to pay for it. So over here is I'm willing. These are people that are saying, I am willing to buy in on this play. But somebody, go ahead and sell me your shares here. It would be the same exact thing if we want to think about a car example. Someone says, I have $10,000. I got $10,000 in my hand. If you want to sell me your car for $10,000, I will take it. But the thing is, someone has to be willing to come over here. Someone needs to be willing to jump up over here. All the level 2 is basically one big negotiation on who's going to budge here first. Now we have, these are all the limit orders. These are all the limit orders, so the bids and the ask. Now, obviously, we are going to have market orders just come flying on through. Hey, I'll take this price. We're going to have people who already have shares that are saying, I want to sell it. Yep, I'm just going to do a market order. So you cannot see market orders on a level 2. You can only see limit orders on a level 2. Well, Deck, how do I know if an order goes through? An order is going to go through right here. This right here, team, is going to be our time and sales. So this is going to be our time and sales here. And our time and sales is going to be showing us what? It is going to be showing us when an order goes through and the price is going to be changed. So you are going to see white, green, and red. Now, what does these mean? Red is going to obviously mean, as you guys can imagine, that the stock is, we had a sell order and that is making the price drop. That means the price is dropping. Okay? If we have green, what do you think that is going to mean? Green is that the price is rising. People are buying shares and that's making the S&P 500 go up. And what do you guys think white means? White means that people got filled on this, but there was no change. There wasn't any change in a price. So maybe again, the price is $538.45 and people just kept buying at $538.45. So there wasn't any change in the actual price. So what I am looking for when I get involved on a level 2 is I'm going to switch this on over to maybe something a little bit slower. And how I always think about this is I think about it as more of a battle. So let's go over to CXAI here. What I am looking for when I take a look over on this play is I'm saying to myself, I'm going to take a little screenshot here, is I'm thinking about, okay, where do buyers want this to go up to? What are the buyers' goal and what are the sellers' goal? So the buyers, where do you think they want to push CXAI up to? CXAI, they want to get this play up towards $3. The closer that CXAI gets up towards $3, the better chance there is going to be for the buyers to be able to strive and have success. If all of a sudden the buyers say to themselves, hey guys, if we can get this play up towards $3, that's going to make the sellers panic. The sellers, The shorters, guys, the people over here, the people that want the play to go on down, the shorters, they're going to get nervous. They're going to panic. They're all going to start getting out of their play, and more buyers are going to come on in. So as a buyer, right, as someone who's in on this play, they want the stock to move up towards $3. What do you think the sellers, aka the shorters, want? The shorters, they want the play to start dropping probably underneath the price of $250. You start going underneath the price of $250 here, that's when we're going to have panic. Now, some people will say, well, Deck, why would the sellers want it to go low? Wouldn't they get out at a worse price? I'm talking about as if they're already in on the play as a shorter and they want it to go lower so they can make more money. I'm talking about as already someone who's in on the share as a buyer and they want this play to keep going on up. As a buyer, you want that stock to keep going higher and higher and higher. As a shorter, you want that stock to keep going lower and lower and lower. So really what we have here is we have a buyer, we have a battle between one army, a battle versus another army. Or we could think about it as like a soccer team. We have one soccer team and they will score if they again surpass $3. And the same exact thing is we have another soccer team and they will score if they again surpass $250. So really when I take a look over on the level 2 here, I'm seeing right now that if we kind of just wanted to draw this on out in a very kind of childish manner, but again, a great manner here, is the sellers. Once we establish where support and resistance is, we know that we have this, let's just go with this soccer field here, okay? Here's the soccer field, right? We know that right now, anything that's right around 275 is going to be in the middle of the field. The buyers are going to have one goal. The buyers are saying, we want to score a goal. Well, how can buyers score a goal? They score a goal if they break $3. If they break $3, there will be hype, there will be excitement, and most likely this stock is going to squeeze up towards new highs. What are the sellers' goal? The shorters, the people that are on the ask, the shorters, the sellers, their goal is to score a goal over here. And their goal is to be able to go down towards 250. And if they go down to 250, guess what's going to happen? That stock is most likely going to lose a lot of attention, a lot of hype. People are going to give up and it's going to drop even lower. And really all we're doing right now is we are watching a battle form between these soccer players, between these buyers and sellers. And we know the closer it gets to these price points, the more excitement there is. There's a lot of excitement when the ball is being shot at 250 and the goalie has to make some action. There's a lot of excitement when the ball is being shot at the goalie at $3 and people are trying to block it or people are trying to make it happen. So right now, when we're taking a look over on this, right now the ball's just getting passed back and forth, right in midfield. When we come up towards $3, there's a lot of volume. There's a lot of hype. There's a lot of excitement. People are trying to score. When we come on down towards 250, there's a lot of hype and excitement. People are trying to score. So really, we can see this by over on the level 2, that right now we're not going to have a lot of boom, a lot of action while we're just sitting in the middle of the field. The goal where the crowd goes crazy and everyone goes wild is when one team scores on the other. So that's kind of how I'm always thinking about it. Is I'm always watching, can the buyers beat up the bids? Or excuse me, can the buyers beat up the shorters? Can the shorters beat up the buyers? And who's going to win this match? And as you can see right now, the match is pretty even, right? The match is just sitting right at that 270 mark. Hey, again, the buyers had a couple shots on goal right up here as it came up to $3. The shorters had their shots on goal as it came on up towards 250. But if I again realize this mentality and understand how the level 2 is working at this time, well, I can basically sit back right now and say, hey, guys, you know what? I don't really have to be too involved over on this trade. I don't need to have my heart beating. I don't need to have some sort of an adrenaline rush right here because I'm just saying to myself, hey, as long as it sits right around 270, that volume, that ball is just at midfield, the stock's not going to do anything. The excitement happens when we come on down towards 250. It starts coming on up towards around $3. So really, every single time I'm watching the level 2 is going to be showing me the present moment, the present trades, the present action between the buyers and the sellers. The volume that's going through it is going to help me understand how hot the play is. But once I establish where support and resistance is, I know again where buyers are trying to get up to. And I know where sellers are trying to go down to. And I can get a persuasion on who's in control. If we keep again attacking $3, buyers are in control. But if we again keep attacking $3 and we can't break it, we can't score, eventually we get that reversal. And then shorters are in control and they're trying to attack, they're trying to score. And if we crack 250, we get a sell-off, we score a goal. And that's where I know, hey, momentum's on that side. Let me not be on the buy side. Remember, when we score a goal, when we break momentum, when we start spiking, we don't want to go on the opposite side. We want to realize that, hey, they're scoring right now. Momentum's on that side. We want to go with that momentum for the moment until our next support line, until our next kind of field is set up where we can establish new support and resistance. So level 2 is just a big battle between buyers and sellers, and it's just going to help us understand who has control of the ball. Right now, we're at midfield. There's really nothing to worry about. As we come on up, buyers have control. As we go down low, shorters have control. We score, buyers move on up. We don't want to be shorting against that. We have, again, shorters go in control, start scoring. We don't want to be looking for a dip buy because we know momentum is going to take over. We know that the left side is buyers, right side is ask and shorters. And really, team, the more you practice, the more you study, the more you're going to be able to predict and understand which way momentum is moving, so you really aren't ever going against the grain. Okay? So, awesome. I love doing that. Love getting that on through there. And that is going to help us understand, of course, what is going on with level 2. So, level 2 right here. Done. Let's do it, baby. So, man, just thinking about how much that we have been able to accomplish so far. From paper traded, do's and don'ts of trading, candlesticks, support and resistance, trend lines, order types, float and volume, indicators, level 2. How many people are already excited? How many people have already gained value here? How many people have already said to themselves, I've already learned more than what I knew yesterday. I've already learned more than what I known waking up this morning. I've already, again, have been able to allow myself to say, hey, this is exactly what I needed. But we still have more to go. We are about halfway at this point, traders. And now we still have to be able to get a few more done today and then be able to nail everything going into tomorrow. So let's keep chugging along, because the longer we get in, the longer these lessons are going to be, because there's a lot of detail coming out behind them. So what I actually want to jump in is we're actually going to go with this one first. How to find hot news. So we are going to go over to this hot news section, and we are going to figure out how to find hot news. How do we get hot news? How do we get this volume? How do we understand where this hot news is going to be coming on out? So this is one of the best ways to be able to make money in the stock market. This is one of the easiest ways to make money in the stock market. And if you can master this, you can be able to drop your job right now and be able to be a full-time stock trader. You must study press releases. Study press releases and figure out how press releases are going to react. Who's going to buy them? Remember, it is one big psychological game. If we see that a hot press release comes on out, a press release that has good value, that's showing that a stock that is oversold just had a good catalyst, aka a good press release, people are going to buy in on it. And it does come down to first come, first serve. Let's think about this. Has anyone ever seen the movie Home Alone before? I'm sure you guys have. And in the first Home Alone, Kevin is up in his room and they have that huge family. And he comes on downstairs later on and he's saying, has anyone seen my cheese pizza? Has anyone seen my cheese pizza? And there's like 30 people on that house. Well, Kevin came down 10 minutes, 20 minutes later, so his family ate his cheese pizza. Same exact thing when it comes down to stock trading. If you are a person that is late to the game, you are going to miss out on the pizza you want. You are going to miss out on the stock you want. We know hot press releases come out every single morning. In these press releases, we must be willing to wake up to be able to find them. If we are not awake and we then wake up an hour, 2 hours later, we are not going to be able to really profit off of these plays. It is a game of first come, first serve. I would rather sacrifice sleep and be able to make $500 to $1,000 rather than sleep in for an extra 30 minutes. If I was in your room and woke you up and I said, if you get up right now, I'll give you $1,000 in cash, I'm sure 99.9999% of you guys would say, okay, I'm up, give me my $1,000 in cash. That's exactly how I think about it every single day. When I wake up in the morning at 6:30 in the morning, I'm thinking, hey, I could find the best press release of the day to be able to make a lot of cash and be able to make a lot of money. So let's think about how these press releases work and what we are looking for in these press releases. Let me bring this on over. So when we are trading these press releases, we must understand press releases are going to come out in pre-market. Pre-market is from 4 a.m. all the way till 9:30 a.m. Eastern time. Now, the majority of hot press releases are going to come out from 7 a.m. Eastern time to the time of 9 a.m. Eastern time. It is going to be a 2-hour stretch of the majority of hot news. Now, the crazy thing is there is brand new news every single morning. Every single morning, we will have brand new news. We'll have brand new press releases, brand new filings, things that are going to pop on up. Now, the reason why that press releases get such great reactions is because it's out of the blue. When we have a stock that is oversold, when there's a stock that's oversold, when there's a stock that is low in price, and all of a sudden they come out with a great partnership. Maybe all of a sudden they come on out with positive results. Maybe all of a sudden they came on out with some sort of agreement. Maybe they come on out with some sort of large investment from another company or from another individual. These are things that get people excited. If we see a drug company that all of a sudden says we have positive results with cancer trials, we have figured out the cure to cancer, what do you think is going to happen? That stock is going to increase in price dramatically, extremely quickly. So that's what we want to be looking for. So every single day, traders, we are going to wake up early, and yes, you will need to have a news scanner. You will not be able to find the hottest news without any sort of news scanner. So as you guys know, the news scanner that I use is FoxRunner, and it's just going to tell me all of the hottest plays every single day. So let's go over to the all news here, and let's talk about everything that we need to do. What we need to realize is these are our hot keywords. I'm going to download this hot keyword list right here, and we can actually talk about this. This is our hot keyword list, okay? These are words that we know are going to get some sort of reaction from the public. We know that the word phase one grants any large investors or any large investment. The word accepted, new, signs, merger, gain, win, accept, secure, signed, acquisition, merge, gains, patent. This is going to get some sort of reaction from the market as maybe again we have been accepted into this new program. Maybe we sign a merger agreement. Maybe we have won a contract, right? These are things that are going to get traders excited, but it's only a 1-star press release. What about a 2-star press release? I'm going to read these words. We have phase 2 receives FDA approval. Benefits, beneficial, fast track, breakouts, acquirements, expands, expansion, contracts, completes, promising, achieves, achievements, launches, received, receive, approves, approved, approved, breakouts, contracts, complete, completed, achieve, launches, purchase, repurchase, bankruptcy, and special. So these are words that are going to get even more excitement. Let's keep on going, guys. Phase 3, positive, top line, significant, demonstrates, treatment, drug trials, agreement, cancer, partnership, collaboration, improvement, successful, billionaire, increase, awarded, top line, demonstrates, demonstration, significant, significantly, agreements, partnerships, collaborations, awards, improvement, survival. And then the best ones we can get is reaching endpoints, primary, positive CEO statements. So team, this is what we want to be looking for in the title. We do not need to read the entire press release of a stock. All we have to do is read the title of a press release. And if it has one of these keywords and even multiple keywords, it is going to help us understand why this one is getting a reaction. So we might see a press release that looks like this. We have positive top of the line data showing that we have completed, right, our brand new drug treatments, our brand new drug trials. So you can see we have a mixture of some 3-star words with some 2-star words. You can see we have received an award, right? Received an award that shows significance, significant whatever in our treatments. We have reached our positive endpoints that are demonstrating our drug trials are successful, right? These are these press releases that bring in a lot of hype, a lot of momentum, and a lot of action. So if you study these keywords, you are going to be able to figure out when these hot press releases, why they come on out, and we get these big time spikes. So I want to show you guys something here. I want to be able to you guys to realize, let's switch this out by time here. And I want you guys to realize there are bulk waves. These bulk waves that are going to be coming on out are going to come on out at 7 a.m., 7 a.m. is going to be the first bulk wave. 7:30, 8 a.m., 8:30, and 9 a.m. These are going to be the times that the hottest press releases are going to be able to come on out. Notice what happens though at the time of 8 o'clock. At 8 o'clock, we have news here, we have news here, we have news here, we have news here, we have news here. Look how much news comes out at the time of 8 o'clock. It is insane. Can you guys realize this? Look at all the news that comes out at 8 o'clock. So the thing is, I used to have to say to myself, all right, I'm looking at all this news. I'm trying to figure out what is good news, what stocks are actually worth getting myself involved in. But the easy thing is over on Fox Runner is they have all of the press releases, all of the hot keywords already set. So what's so nice is it will highlight what the keywords are. So it just tells us if it's a 1-star, 2-star, 3-star word, right? So I might see, okay, it's a 3-star press release collaboration. I might want to look into it. Okay, hey, there is, right here, right? APLM. 3-star press release has the word positive right here. Positive preliminary data. I can go ahead, I can read this entire press release, and I'm able to get everything that I need to do here. So every single morning, if we can go ahead, be able to find the hottest press releases, we are going to be able to have the edge of getting in right away. You can also see at this time, team, I also highlight certain keywords like the word positive. I really like the word positive data. So I made this, in bright yellow. Whenever I see the word phase, as in phase 1, phase 2, phase 3, I just have this little mark. And positive data, I always see it highlighted in yellow because I really like that word, and I added a smiley face. But you could add whatever you want. You could add artificial intelligence, right? You could add artificial intelligence, and then you could add, a little robot if you wanted to, whatever color you want. Put a little bit of robot. So, whenever a keyword that you like, artificial intelligence or whatever comes on out, you'll be all set, ready to go. But APLM, you ask, how do I find these press releases every single morning? Well, I see APLM, 3-star press release. Take a look at this, positive. We announced positive data. Hold up a second. Didn't I just tell you that positive data is going to lead towards a very nice spike? We have positive line, data. On our drug trials. Those are 3-star words right there. I see 3-star words. I want to take a look over on APLM. What do you guys expect APLM to start doing? APLM right here, we take a look over on this play. Guess what happens? It starts spiking on up. Guess what time this starts spiking on up? It starts spiking on up at the time of 8 a.m. So if I again am looking at my news scanner and I see at 8 o'clock, we have a 3-star press release with the word positive phase 2 data, positive phase 2 data right here at 8 o'clock. So I know what time it's coming on out. I know what the key words are. And I know, again, I can do limit orders to get in on these plays. Well, if I jump in at 8 o'clock or 8:01 or 8:02 or 8:03, whatever, look how much money I can make because it is a first come, first serve game. If I, again, can get in on this play quickly, I can be able to make a lot of money. I can be able to make a lot of cash. I can be able to make a lot of profit. So that's what it all comes on down to, team. So we can keep going through, again, 8 o'clock right here. And then notice 8:05, 8:07, 8:15. And then the next bulk wave comes at 8:30. So the next bulk wave comes at 8:30. I might look at, certain press releases. Maybe, again, partnership press release. Okay, I would watch that. Remember, what leads to a big spike, though? A big spike is not only going to just be a 3-star word, it also has to have a low float. So if we have 170 million in float, we're probably going to know that stock's not going to go on any sort of big spike. We want to look for stocks that have, again, good hot keywords, have, again, good star rankings. And remember, team, if I don't have a good keyword, it's not highlighted, there is no ranking, I don't need to worry about this garbage. Don't need to worry about it, don't need to worry about it, don't need to worry about it. But I will want to watch the stocks that are good keywords, that have low floats, because those are the ones that have the best potential to go on big rips and big runs, right? So that's what it comes on down to. So let's just look at the best stocks, today so far, right? The best stocks today that have come out with news when we take a look at this, obviously is that APLM stock. Positive results right here. That's the one that's going to have some of that most momentum. I think Elway actually got delisted though. Let me just take a look here. Oh, Elway's up. Elway, going from $11 to $16. What was the press release that we had over here? Let's just take a look. Elway, 3-star word, up 45%. It had news. It only has 4 million in float. So what time did this come on out? This came out 9:30. Again, 8 o'clock, 8:30, 9 o'clock, 9:30. Came out right when the stock market opened. What was the keyword that stand out here? Significant. So again, we have our keyword significant. It's showing that we have significance, and that is going to be one of the keywords that stands on out. 3-star word. When we see the word significance, that is going to be a word that brings in hype and that brings in excitement. So that is going to be something that we look at. Elway has gone from $11 all the way up to $16. Remember, for a stock to spike, we need to have some sort of credibility. For a stock to spike, for a stock to rip, for a stock to move, for a stock to run, we have to get some sort of action. I believe there was also a couple other press releases here today that brought in some action here. What was the one earlier today? I'm trying to look. CXAI. So CXAI here, traders, if we take a look at this one, it says CXAI, this actually came out last night. So this was not on this morning's news. This one came out in after hours last night, announces largest expansion deal and multi-year agreement. So we had a press release last night over on CXAI, okay? CXAI had a press release last night. What happened with CXAI? CXAI, let's go back to a 10-minute time frame. 10-minute time frame. CXAI went from 145, spiked all the way up to the price of 315. Traders, why in the world did CXAI go from the price of 145 and spike all the way up towards the price of 315? Well, let's go ahead and take a look at it. Let's go ahead, type in CXAI, see again what's going on with this stock. We can see when we head on over towards news over on CXAI, we have right here, take a look, 3-star word. What is the 3-star word that came out last night? CXAI comes on out and announces largest expansion deal on multi-year agreement with Google Cloud. So if we have the word agreement, and that is a 3-star word, as we talked about, we can go ahead, see what this news is all about. Announces a largest expansion deal and agreement. 3-star word tells me obviously right away that this play is going to be getting this very large spike and this very large rip and this very large run. So that is going to be one of the best ways to be able to understand how you are going to be able to find the hottest news. Unfortunately, you cannot do this organically. You will need to have some sort of scanner that is going to show you all the news that's coming on out. After you see all the news that is coming on out, you need to study the hottest keywords in the title to tell you why these stocks are spiking or why they would spike. After, again, you understand why these stocks are spiking, you know that they come out at 7, 7:30, 8 o'clock, 8:30, 9 o'clock, 9:30. And if you're watching the news scanner at these times, you are going to be able to find the hottest press release every single day. So let's even take a look at yesterday. I believe yesterday, what was the best spike? GNLN, I believe it was. Guys, GNLN, yesterday's best spike. Who remembers this? Let's just go over GNLN. Take a look over on this play. GNLN, yesterday, came on out with a press release that went from the price of what? $260 and spiked all the way up to $10.90. If you had a $2 account, or excuse me, a $2,000 account, you could have been able to make $8,000 from a $2,000 account in the matter of 20 minutes. What was the press release that came on out over on the stock? We go to over search, GNLN. Let's again see what we have here. GNLN, go to overview here. What was the big news that came on out yesterday that led to this very big spike here? So GNLN, was there any sort of news? Yep, GNLN right here says we announced a non-binding letter of intent to an exclusive distributor in the US of safety strips. This was the news that came on out. Do you guys realize something? This news came on out at the time of 8:30 a.m. 8:30 a.m., this stock came out with news, okay? That's funny because that's the times that I've told you that the news is going to be coming on out. This press release led to GNLN going from $250 and spiking on up towards the price of $10.85. You know what else I want to check right here? I'm also seeing that there is Form 4 filings. Who knows what Form 4 filings are? Form 4 filings either show insider buying or insider selling here. So actually I want to open this back on up. What do we have? Ooh, guys, take a look right here. Isn't this a little funny? Hold on a second. Can you guys realize that we have, I'm going to make this a little bit bigger here. It says GNLN, right? Today it's in the red. Today it's in the red. That's why it's showing this is yesterday's top gainer. You can see we have a non-binding letter showing that it's going to be the exclusive distributor for this, spike detection test strips. And then moments later, right? Guess what we have here? We have a Form 4 filing. Form 4 filing shows changes in ownership. And guess what we have here? We have Barbara Share having an A here. What's A stand for? A stands for acquired. Acquired shares. How many shares are they acquiring? Here's 100 shares, 100 shares, 100 shares, 50 shares, 100 shares, 100 shares, 300, 100, 350 at this price, 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 at this price. So now we're having insiders buying it after this news. Here's another one. Is this good? This is Barbara as well. Barbara buying more shares, acquiring more shares at these prices. So you guys can be able to see we have a hot press release yesterday. We have insider buying that's going on yesterday, which led to this play going on this monster spike here. So that's pretty crazy to be able to see. That's pretty wild to be able to see over on this play, to see GNLN coming out with that press release at the time of 8:30. So really neat to be able to say, all right, I understand what time it is. And that's all we want to do. We want to put the odds in our favor. So if we can understand the time, which is going to be these time frames, and then we can understand, well, what are the hot keywords, right? And then we just have a scanner that can be able to filter it for us. As long as we are awake, we are going to be able to find these hot news. And then on our earlier lessons, we went over how to get involved in pre-market, how to get involved in these stocks. And then, of course, we can go from there.